Hello everyone, and welcome to this presentation of the one chart pattern that can make you successful. Welcome once again. My name is Primo. I am the president and founder of Specialist Trading. Once again, for those of you who are unfamiliar with our website, we are first and foremost an educational company. We're really about teaching you all the things that I've accumulated in my 37 years of trading so that you can ultimately empower yourselves with your own trading decisions. We feel that too many traders are losing today because they rely on outside sources or faulty information to tell them what to do. So my goal is really to teach you how to trade with the Specialist Edge, which is so that you can ultimately empower yourselves. You can make your own decision. A lot of people say, well, Steve, I haven't been trading long enough to do that. Well, I've been trading for 37 years. In fact, just to give you a little bit of background about myself, I first started trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. I traded through the crash of 1987 and through the bull market that followed after that. I've seen and traded through just about every imaginable market environment that you can think of, from straight up to straight down to sideways markets. I've traded every system and strategy and technique you can think of as well. And just about I'd say 6 years ago, I started Specialist Trading, where all I do is teach and mentor my students all of the things that I currently use myself. These are, as you see, insights, wisdom, and trading strategies that I've accumulated in my 37 years. So what I teach to my students, I actually use myself, and you're going to see some really nice examples of that today. But before we begin in today's presentation, as always, we are required to show you our disclaimer, so I ask that you please take a moment to view it. I'm going to show you some performance results using this #1 chart pattern, but please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So please take a moment to view our disclaimer, and as you're also looking at our disclaimer, I'd also like to invite all of you to follow us now on Twitter. We give a lot of great free information. We talk about signals we're in. We talked about signals that we maybe just exited out of. We give you different information in not only stocks but also the E-mini markets as well as the Forex markets, because all of our strategies and techniques follow all of those three major markets. So I invite you to follow us at SPCLST TRADG. There's a lot of great information, a lot of wisdom and things, and shows you what we're doing currently at Specialist Trading. Now, as I stated, we are first and foremost an educational company. I know a lot of people love to sign up for websites. There's a lot of educators out there that tell you we've got the perfect strategy, the perfect system, the perfect technique, and all you have to do is blindly take our signals. I know firsthand that this is very difficult to do, because I used to try and trade this way myself. I tried to take other signals of other people, and believe it or not, my first year or two on the trading floor, I couldn't make a dime. I struggled tremendously. My mentors, who were also specialists on the floor, were able to turn my way of trading around to get me on that road to consistency. And really what they taught me is that the way you get consistent is by really simplifying things and relying on your own decision-making process. So that's, once again, what I like to do to all of my students. Even though we provide you with strategies and we give you signals on a nightly basis if they're generated, it's more about teaching you how to spot these things, so that ultimately you can spot them for yourselves and you don't have to rely on us anymore. It's mainly like homework, just to check and see if your work is in line with what the strategy is telling you. So my goal is to teach you how to trade with the Specialist Edge. Now, what my mentors taught me when I was struggling was that here's what trading should be. They said, Steve, trading should be non-subjective. In other words, two traders shouldn't look at the same thing and come up with two entirely different results. There are so many different methods or techniques out there that are entirely too subjective. In fact, I've been trading once again for 37 years. I've had people try to explain different techniques to me, and I can't make heads or tails out of them. Even with all the knowledge that I've accumulated, it's too subjective. There's too much discretion involved. All right, so we want things a little bit more cut and dry. Even though we allow 20 to 30% room for discretion in our own trading at Specialist Trading, we don't want it so subjective so that everyone comes up with a different answer. So it should be more cut and dry, where so two people look at the same chart or the same technique, the same pattern, and they can come up with the same answer, whether you should be going long, short, where you should be getting in, where you should be getting out. Okay? So trading should be non-subjective. They also said that trading should be consistent. Once again, traders are looking for home runs. How many webinars have you gone to where people will tell you this is 150% right each and every month? There's no way you can lose. It never has had a losing trade in the last 10 years. Okay, we don't teach that at specialist trading. What we try and instill in all of our members is a more consistent approach where it's 2 steps forward, 1 step back. We're not going to sit here and tell you that at times our strategies won't go into small drawdowns, but we have ways of really lessening that and keeping you out of those small drawdowns, as well as getting you into strategies that have more of a consistent basis to them as opposed to looking for those home runs. Now, from time to time, we will hit a home run in our strategies, but we're more about hitting those singles and just having the consistency so that we can be trading 10, 20, 30 years down the road. So trading should be more about being consistent as opposed to, being that, pie in the sky where you're going to get a home run and you're looking for, and you're going to hit a big jackpot each and every trade. And then lastly, and I think most importantly, my mentors taught me that trading should be as simple as possible. Okay? They said that most traders, for some reason, and I know myself included, we have been taught from the beginning that the more complicated you make your trading, the more complicated your trading plan is, the more chances you'll have for being successful. And in my years of trading, it's actually what I've learned, it's actually the opposite. The least complicated and the most simple type of trading actually gets you more on that road to being consistent. So it's really the opposite. One of the first things my mentors said to me, they said, Steve, it's the easiest thing in the world to overcomplicate your trading. Anyone can do that, whether they've been trading for 40 years or 40 minutes. But it's very difficult to simplify your trading. It's very difficult because you have to strip away the things that, for some reason we've been taught will make us successful. And really, in reality, they won't. They'll actually impede our success. So we want to strip those things and be brave enough to say, I'm not going to use these anymore, and not rely on them, and just keep our plans as simple as possible. Okay, so here's what you're going to learn today. That was just a little introduction. Here's what I'm going to teach you. I'm going to tell you the truth about formation patterns. A lot of traders love to use and look at formation patterns in order to come up with their decisions. Okay, we're going to talk to you about the truth about that. We're also going to share with you the truth about candlestick patterns and how both of these different types of trading are non-consistent and they're too subjective if you use them under conventional wisdom the way you've been taught to trade them. And then I'm going to share with you the #1 sharp pattern that can make you successful. Extremely, extremely simple. In fact, you'll see it and you'll probably say, this is just too simple. I don't understand how this can work. Then, lastly, we're going to show how using this #1 chart pattern along with another great tool, the PET-D, will formulate a 1-2 approach to really make us more powerful in trading strategy #4, probably our most consistent strategy to date. Along with the PET-D, you really have this powerful 1-2 punch together. So I'm going to show you some examples of that, okay? Once again, for those of you who may have joined us a little late, remember, if you happen to have a question, please wait till the very end. I see some people may have already shared and tried to ask some questions. There is a question and answer box that I must open up in order to answer any questions and see them. Okay, I'm closing that right now, so I'm not going to open that up until the very end of the class. So it doesn't even pay to write a question because I'm not going to see it till the very end. So please, kind of try to remember, if you have a question, many times if you wait till the next slide, the question will be answered. I'd say the most important question, or I should say the most popular question that everyone asks is this being recorded? Yes, it is. So as you see in the chat box, there is a phone number there. I'll also give you an email address at the end of today's presentation. If you want to have a link to this presentation, simply call us or email us at the link provided. I'll give it to you at the end, and you can get the recording of this presentation. Okay, so let's begin. All right, once again, hold off any questions to the last 10 minutes of today's class. Let's talk about the truth about formation patterns. Okay, I'm just going to go over the basic ones, but these are probably the ones that are most popular and what people use the most. Here's an ascending triangle. Okay, as you can see, the ascending triangle is you're looking at a particular pattern in the market, and you see that we've hit this kind of a top right here, and then the bottoms are ascending. So you kind of have this ascending triangle here, and conventional wisdom tells us that you're going to go higher, as we see it in this particular example. Okay? Seems really simple and easy. It's very subjective, though. I mean, someone can look at the same chart without the lines drawn and not have any idea where the ascending triangle is. The same thing goes for a descending triangle. It's just the same thing reversed or upside down. You have this kind of downward, upward, and so you could draw some type of horizontal line giving you this so-called support followed by lower highs, and that would give you the descending triangle. conventional wisdom once again tells us when that is broken to the downside, you should be going much lower. So this is a negative pattern. Once again, extremely subjective, very difficult to see. Two traders can look at the same chart without the lines drawn and come up with two different scenarios. How about an ascending wedge? Well, this looks really easy to see after the fact because you have this nice wedge drawn with the lines, and this is meant to be very negative pattern because once this is broken, as we have here, conventional wisdom tells us we're going lower. Also very difficult to ascertain. A descending wedge, the exact same thing, except we're going lower. We have a downtrend in place. I don't know how you're going to figure out where this midline and the bottom line coincide, but according to the rules, this is a very positive way to view the market because if we break out of this line, the odds are telling us we're going higher. You know, this may work out. I'm not saying that it doesn't work, but we want things that are more cut and dry. This is very difficult to spot. Someone could, looking at this, could say, I don't see the descending or ascending wedge at all. How about a head and shoulders? Another very, very extremely popular pattern in all the markets, and its basis is you have a shoulder followed by a larger top, which is the head, followed by a smaller top, which is the right shoulder. And then you have this neckline, which is basically support. When this is broken to the downside, you have a strong move to the downside. Okay, it seems very easy to see right here. Once again, extremely difficult to spot. Let's look at this chart, for example. It doesn't matter what it is, it's just a generic chart, but we're using this for educational purposes. Someone who could have read a book on head and shoulders could say, I spotted it, I see it. Here's the head and shoulders. We have the left shoulder, we have the complex top right here, the high, the head, and then the right shoulder. And guess what? We just broke down. So I'm shorting this because I've read and conventional wisdom tells me that we should go much, much lower. So you go short, and at this point, you're licking your chops thinking you have a nice move to the downside, and guess what? Go straight up. So you're stopped out. And you kind of go back to the drawing board and say, boy, what did I do wrong? I thought that was a head and shoulders. So time passes by, and then you look at the chart again, and you say, you know what? I jumped the gun. I was just a little bit too early because this is the head and shoulders. I had to wait for it to turn all the way around on the right shoulder. So now you jump in again, decide to go short because now it should really fall out of bed. So you go short and sell right here once again, and it goes the opposite way. Okay? Too subjective. This will work from time to time, but when it doesn't work, you give everything back. Remember, we're looking for consistency. There's no consistency here in any of these patterns. How about support and resistance? A great many deal of traders trade support and resistance, especially Forex traders. They love to look at where support and resistance is. And support and resistance, once again, falls into that category of being far too subjective. Why? Because one trader's support is another trader's resistance. It's very difficult for two traders to see the same thing. Here's a perfect example. We see this chart here that looks a lot like that example we showed just prior before, where we have a nice upward range followed by some nice, very nice support points. Now, if we're wanting to go long this generic chart, we would say, well, obviously, if we get down to these support levels, we want to purchase here because this is where it should hold. So you see, this is our buy level right here. So we're following this particular issue, and guess what? It comes there and it goes lower. So we're kind of shaking our heads going, well, we didn't hold its support, but this is really the strong support. So I'm going to buy here. I'm going to double down. And after all, I won't need it to rise that much higher in order to make my money back. So you decide to buy more at this stronger support level, and look what happens. Okay? Once again, it's too subjective. There's no consistency here. We want things that are very cut and dry at specialist trading. How about candlesticks? Now, there's nothing wrong with candlesticks. In fact, probably one of our best Forex strategies that actually transfers over onto stocks and the E-mini is built off of an engulfing pattern. And this is probably one of the most popular patterns there is when you're looking at candlestick patterns, okay? The trouble is most people use it incorrectly. So there's no consistency. The reason why they use it incorrectly is because they see this pattern, or for that matter, any other candlestick pattern, and they trade it out of sync with the trend, okay? We have a proprietary way of telling and knowing when we are in sync with the trend. In this particular example, we are out of sync with the trend. Why? Because we see a very nice bullish engulfing pattern. Now, someone just going to conventional wisdom and saying, well, a bullish engulfing pattern is very positive. It's kind of a reversal, and that's a bullish pattern. After all, it's called a bullish engulfing pattern. you should buy here, right? Well, how come it didn't work? There's no consistency in any candlestick pattern when you're trading out of sync with the trend. So therefore, candlestick patterns only work, or they work with consistency, when you're in sync with the trend. You can't try to pick tops and bottoms because you'll be out of sync with the trend. So we show you at Specialist Trading how to be in sync with the trend with our proprietary trend filters. Therefore, most people lose trading candlesticks because they're out of sync. So once again, we go to what my mentors taught me when I was struggling. Trading should be non-subjective. When you're looking at support and resistance or different patterns such as ascending wedges or things of that nature, they're too subjective. So many people can look at the same chart and come up with a totally different scenario. And also, they're not consistent. You saw the head and shoulders where it just wasn't consistent. It looked like that was a perfect head and shoulders formation, and it went the opposite direction. Remember, we want consistency in our trading. We're not concerned with getting home runs. We're just concerned with having our P&L have a nice upward slope in it. And then lastly, it should be as simple as possible. And with, just with the exception of the candlestick patterns, these weren't very simple patterns. You had to sit there and wait for them to formulate perfectly. You had to sit there and decide, okay, is this an actual pattern or not? Is this actual support and resistance? It's very difficult. Trading shouldn't be that difficult. Remember, as my mentors taught me, it's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify it. So therefore, we want to keep things as simple as possible. And your eyes are going to light up right now and be wide open when you see how simple the #1 trading chart pattern should be that can make you successful. Okay? Here's what it is. That's it. One bar. But it must close in the top 25% of its range. It doesn't matter if this bar is a 5-minute bar that you're looking at, a monthly bar, a weekly bar, a 4-hour bar. It does not matter. But if you see any bar close in the top 25% of its range, the market, not an outside source, not some trading or chat room, not some trading guru, but the market itself is giving you an indication to buy. It's telling you it wants to go higher. Conversely, if you see this chart pattern, which is just one bar, once again, doesn't matter if this is an hourly bar, a weekly bar, a 5-minute bar, or a day bar. If you see it close in the bottom 25% of its range, it's telling you that it wants to go lower. It's giving you an indication to sell. Now, is this a strategy? No. Is this telling you that you should sell at the market or buy at the market? No. But this is a tremendous clue telling you from the market itself most likely which direction it wants to go. So that's why we ask ourselves, why is this successful? You may want to write this down. When a price bar closes either at or near the top or bottom of its range, the market is giving you a clue as to which direction it wants to go. Now, I know this may seem simple and very trite, but trust me, what rather advice would you get from the actual market itself? I mean, would you rather get it from someone who claims to be a trading master, or from some indicator that you don't understand how it's based on? Wouldn't you rather get the advice and the signal from the market you're trading itself? When you see a price bar, regardless of its time frame, close in the top or bottom percentage of its range, it's giving you a clue that it wants to continue in that direction. That's how simple it is. Let me just show you some examples here. Here's an older chart of Tiffany, just for educational purposes. And looking back in hindsight, it's easy to say that, well, yeah, we've been in an uptrend. That was easy. But what if in each and every one of these times we had a little bounce or a pullback, okay? What if we're at that point where we want to decide, should we get in or are we going much lower? Well, if we look at all these little sell-offs that Tiffany had on the way to going higher, guess what? Look at all the bars that closed in the top 25% of the range, and then look what happened after that. Every time we had a little sell-off, we see these abundance of bars that close in the top 25% of its range, and then we went higher, okay? Now, this is a daily bar chart. If we look at a 5-minute chart of the E-mini, older chart, we could use the same philosophy. Every time we had a little bounce, what was the market telling us? Well, we bounced right here, and look at the bar closes in the bottom 25%. We had another bounce, 2 bars closed there. We had another bounce. As long as we're in sync with the trend, which was down, we're looking for confirmation that we're going lower. How about a weekly chart of the Swiss franc, okay? Safe to say that we're in an uptrend, but every time we sold off, guess what? The minute we had a bar that closed in the top 25%, look what happened. We went much higher. In fact, 1,800 pips higher on this weekly chart. So this is all well and good, but remember, this is just a chart pattern that's giving us a clear idea or direction as to where the market wants to go. It's still not a strategy. It's still not telling us buy at the market or sell here at the market. It's just a clue, a tremendous clue. And in my opinion, the greatest clue you can ever get from a market. But how do we implement this? What's the best way to implement this chart pattern? Well, we've constructed a strategy based off this with about 3 or 4 other rules in addition to this. That is probably one of our most consistent strategies, and that's strategy number 4, okay? And its basis is this chart pattern, closing either in the top 25% or the bottom 25%. Now, in fact, a couple of weeks ago, we actually gave a webinar where we gave away, I would say, the majority of the rules to strategy number 4. Now, I'm not going to give away all over again, each and every week, give you the rules to strategy number 4. You're going to have to come every week to see our webinars, but I will give you just a couple of these rules today. All right, here's some of the highlights. It's for virtually all traders, so you don't have to sit here and say, well, Steve, I've only been trading for a couple of weeks. The same hedge fund traders who've been trading for 30 years use the exact same strategy by people who've been trading for 30 minutes, okay, from beginners to advanced. There's no difference in the basic format of the strategy. It's for traders who are looking to catch quick momentum moves, okay? So if you use it in its most standard form, you're not going to be in the market for a long time, okay? But we have ways to actually extend your gains. We have a lot of traders who would like to stay in longer, so we show them how to stay in longer. Its intensity level from 1 to 2 is a 3. From 1 to 3 is a 2, excuse me. In other words, if 1 is the most intense you'll ever see of a strategy, and 3 is the least intense, where you can just virtually enter your order and walk away, it falls right in the middle at 2. So it's a very, very simple, easy strategy to implement. You can watch it in front of your computer or you can walk away depending on what time frame. Now here's where I'll give away a couple of the rules. It only uses one indicator. That indicator is the 50-period simple moving average. So the other rule is, where is price in relation to that 50-period simple moving average? So if we see a bar that closes in the top 25% of its range, that is above the 50-period simple moving average, or at least closes above, well, that's probably 2 of the 4 or 5 rules associated with strategy number 4. Okay, so you need to see those 2 things. Now, conversely, if we see a price bar close below the 50-period simple moving average and the bar closes in its bottom 25%, well, those are 2 of the requirements of a sell signal for strategy number 4. The best thing about this strategy, it works in any time frame, in any direction, and in any market. So if you became a member of strategy number 4, of our strategy number 4 course, you can virtually use this in any market. So you'll be getting like 3 strategies for the price of 1. All right? But please remember, our edge here is consistency. I'm not going to sit here and tell you that every strategy for trade is a winner. But I can sit here and tell you that it's tremendously consistent by the people that trade it, our hedge fund traders, as well as our amateur traders that trade it on an individual basis daily. And they're very happy with it. We haven't had any complaints, so there's a lot of great ways to use it. But it's about being consistent. Okay? So let's show you some strategy number 4 examples, all right? Let's start off with stocks. VLO, as you can see here, the stock was heading lower into, I believe, into April here. And on the 14th of April, which just a couple of weeks ago, a couple of Mondays ago, we see here that this met all of the rules. We closed in the top 25%. You can't see the 50-period simple moving average. We're above the 50-period simple moving average. So this was a sign to go long according to strategy number 4. And by the way, all of our strategy number 4 course members also had the free add-on, which automatically generates an arrow, such as you see, telling you that there is a buy signal in strategy number 4. So you could have entered your order, and look what happened in the following days up until yesterday. How about LinkedIn? Well, this was a little while ago, about a month ago, on the 21st of March. As you can see, the stock was going higher to sideways, but guess what? We closed in the bottom 25% of its range. When I say top or bottom 25%, all you have to do is look at the extreme high of the bar and the extreme low of the bar, okay? And just divide that into 4 separate but equal parts. If you closed in the bottom quarter, that's the bottom 25%. We're not concerned with the opening or a candlestick. It doesn't matter what type of bar you use. You can use this with candlesticks. In fact, I'll show you some examples later on today. But when we say range, it's the range of the extreme high, the extreme low. So in other words, if you're using candlesticks, just look at the wicks, the high wick and the low wick, and what that range is, and then divide it by 4. The top 25% is the top quarter, the bottom 25% is the bottom quarter. So as you can see here on the 21st, LinkedIn closed in its bottom quarter of its range. So this automatically generated a sell signal in LinkedIn. And look what happened coming into the first week of April. How about the E-mini? All right, well, we can go into a smaller time frame. Let's look at a 1,000 tick bar chart of the E-mini. Now, this was the 21st. This was just about a week ago, last Monday. All right, so we had nice movement here, an up movement in the first hour, followed by down movement, and then up movement. And so this is for traders who like to trade a lot. I would suggest going and trade this in tick bar charts, and look at all the signals you got. These were all valid signals to go long, and then right here, you could either have, if you were trading this conservatively in our conservative version, which we teach you, you could have either broken even on this trade or had a small loss. So once again, we're not trying to cherry pick all the trades and just show you that each one is a winner. You may have lost on this particular sell trade. But then again, you could have jumped back in and gone long all these trades. If that's a little bit too intense for you, you could switch to even a 5-minute bar, and it's really not that intense. As you can see, we started out the day here. This was on the 28th, which was just this past Monday. We started out the day going higher, and guess what? In the first hour on a 5-minute chart, we generated a buy signal. Here, closing in the top 25%. Also, it met all the other requirements, which I can't divulge right now, but it met all the other requirements as well as being above the 50-period simple moving average, and you would have had a nice gain right here, okay? Roughly about 4 or 5 points in the next hour. Now, as the market started to head lower, now we're looking for sell signals, and 2 more signals were generated later on in the day at around 9:30 Pacific time, and you could have had a nice profit to the downside. How about if you want to trade the Forex, okay? Well, same concept applies to the Forex. Now, this is where we don't care what type of bar you're looking at. Here's a candlestick bar. All we're going to do is measure at the top of the wick to the bottom of the wick. We're not concerned with the range of the body. We're just concerned from the very extreme high to the low, and we see here that we closed in the top 25%. In other words, if you divide this by 4 separate equal parts, this closed in the top quarter, because here's where we closed, all right? This also met all the other rules associated with strategy number 4. So this generated a buy signal on the evening of the 28th, and look what happened after that. Next 3 days went straight up. These are all daily or 5-minute bar charts. Now, from time to time, let's say you're looking at a daily chart, and this may happen. This is where we're trying to say we don't cherry pick, because we're not going to sit here and promise you that every trade's a winner. If we look at SNDK, going back to the beginning of February, we see here that we generated a very nice buy signal. Okay, we're above the 50-period simple moving average. Rule number 1. We see that rule number 2 is we close in the top 25%, and we can't give away the other rules, but this was a valid signal to go long. All right, so the automatic arrow told us to go long. So we could have just entered that day at the market if we wanted to, but then look what happened. This would have resulted in a losing trade. So at this point, you're probably getting ready to throw the program out the window, and you're saying, boy, this stuff Steve teaches doesn't work. It doesn't work at all. And then 3 days later, you get another signal to go long, and you said, well, the other one didn't work, so I'm not going to take this one. I'm a little gun shy right now. And then this one goes higher. You could have made all the money back and then some more. Okay? So this is where people get really frustrated. Remember, we told you, we're not about hitting home runs. We're about consistency, meaning that we'll have a loser every once in a while, but they're small losses, and we'll make them back when it gets back on course. Hopefully it'll be 2 steps forward, 1 step back. But how can we get in sync? How can we get the odds in our favor and create some type of filter so that we can increase our odds for success and kind of sidestep these losing trades? Well, this is where I want to introduce the PET D to you. This is a very, very powerful tool. This is something I use each and every day. It's the PET D. It's abbreviation for the Primo Early Trend Detector. What it is a proprietary color bar algorithm. Excuse me. And what this algorithm does is that it automatically colors the bars. If you have a succession of green bars, it's telling you that the short-term trend is up. And if you have a succession of red bars, it's telling you that the short-term trend is down. Okay? So how could we implement this along with strategy number 4 to give us even greater odds for success? Well, here's what we tell all our students. If you get a buy signal in strategy number 4, only trade strategy number 4 buy signals that are colored green, okay? Because not only do you have the high probability of the strategy itself, but you have the pet D telling you that you are in sync with the short-term trend. Now, if we look back at SNDK, here's the way you normally would trade strategy number 4. But if we add the pet D, you see now that we change colors. And what color was this signal? It was red. Remember, if we're going long, we only want to take bars that are colored in green. So therefore, we would have sidestepped this signal and never taken it. Now later on, we had another signal generated. And what color was this? It's green. So the proprietary algorithm has said that this is in sync with the trend. So you could have taken this trade, and you only would have had a winner instead of having one loser. Once again, we're not guaranteeing you that it filters out all of the bad trades, but it does a very good job. In fact, I'm going to show you 3 trades that I took today using this filter. How about sells? Well, only trade strategy number 4 sell signals that are colored red. Here's an older example of ROST. We are below the 50-period simple moving average, and the automatic add-on automatically generated all of these sell signals. Okay? Now, which one should you have taken? You got a lot of signals here, and obviously this one wouldn't have worked out, neither would have this one, and this one you kind of went sideways for a while. You probably would have thrown in the towel wondering if it was ever going to go lower. Well, if we simply add the pet D, we only want to take sell signals that are colored red. And look at this first one. Well, you wouldn't have taken it. It was colored green. Second one was colored green. So was the third one. The only one that was in sync in the short-term trend was this one. So you would have sidestepped all of these losing trades and taken this one, and look what happened. Okay? So let's look at some current examples using strategy number 4. Remember, these are bars that close in the top or bottom 25% of their range, accompanied either above or below the 50-period simple moving average, and the pet D. All right, here's CVX coming into the 11th of April, which was just 2 or 3 weeks ago. Now, the stock was not doing much, heading lower, and you can see here we have a splash of green, a splash of red. All of a sudden, the automatic add-on generated a buy signal in CVX, and it was confirmed with a green pet D color. So you would have taken this trade, and look what happened in the next 2 weeks. This chart was taken up to currently up until yesterday, I believe. How about Facebook? Okay, in March, we had 2 signals. The very first signal was a buy, colored green. So this was an actual signal to take, and you could have taken this signal and had a nice small little gain. Nothing great, but at worst, you probably would have broken even on this trade if you wanted to go for that big home run. If not, you could have taken a nice 2 or 3 points out of this very easily. Later on in March, we were generated another buy signal, but this signal was red. So therefore, we would not have taken it. And look what happened. Facebook fell out of bed coming into April. So we're out of the market trading any type of strategy number 4 signals until we get one that's in sync with the pet D. So as we look in the first week of April, guess what? A signal to go short, and it is red. So you would have taken this, and this was a quick 4 points to the downside in 2 days. All right? See how simple this is. Trading does not have to be complicated to be consistent. How about CRM? Well, we have 2 signals that were generated in March that were both buy signals, but they were both colored red by the pet D. So we would not have taken either one. Even though this one would have given us a few points to the upside, it wasn't worth it. Okay, we didn't want to take it. We've been out of sync with the pet D, and we wouldn't want to take this one either. And it's good that we didn't, because look what happened. Now, 2 more signals were generated coming into April. They were both short signals, and they were both colored red. So these were valid signals to take, and you would have been profitable on each one of these. How about the Forex again? We're looking at the Euro-Yen once again. 2 signals generated coming into April. This first one was a buy signal, colored green, and you had 3 or 4 days of nice upward movement of a couple of pips. It would have been really nice, or I could have said a couple of points to say. That could have been very nice, a couple of $1,000 trading the Euro-Yen. And then here was another signal that was generated just a couple of weeks ago. It was a buy signal, but it was colored red. So we would not have taken this. As you can see, nothing really has happened in the Euro-Yen to the upside. How about a weekly chart of the British pound? Well, looking at this, we had 3 signals generated on a weekly basis going all the way back to December, November, December of last year coming into this year. Each one was colored green, so you would have taken each of these if you were a long-term investor, and look at how each one went up after you would have entered into the trade. Now, lastly, I want to share with you some trades that I took. I didn't take this one, to be honest with you. This was a 60-minute chart of the E-mini going back to Monday. Now, if we see on this Monday here on a 60-minute chart, the first hour of the day, we generated a sell signal. Okay, so you could have gone short on an hourly basis because it was colored red, and you would have gone short. It doesn't look like a lot, but this is 15 points in the E-mini. That's nearly $800 per contract. You're trading 10 contracts, that's $8,000. Okay, so this is a nice signal you could have made here. Obviously, you don't have to wait for the very maximum. You could have taken 2 or 3 points if you wanted to. And as we watch later on, we see that coming into the next day, the 29th, which was yesterday, another sell signal was generated by our automatic add-on. But look at this. The PET D colored this green. So we're not going to take this signal. And as you can see, nothing really happened to the downside yesterday. Now coming into today, this morning, we have another strategy, number 4, buy signal generated on the opening bar. And we all know what happened. This was taken up until noon time, Pacific time today. So even the market, I know, sold off a little towards the end. You could have taken a nice 5 or 6 points out of this very simply. Now, let me share with you 3 trades that I did personally take today on a 10-minute chart. They're all strategy number 4, accompanied with the PET D. This morning, today, the 30th, we had a signal generated here to go long. You could have gone long roughly about the 1872 level, and this went all the way up to 1876. So you could have gotten a good 3 or 4 points out of this. Later on, there was another signal generated here, roughly about the 1872 level again, another 3 or so points. And then at 11:30 Pacific time, roughly about 1875, you could have taken another 3 or 5 points out of this. These were all profitable signals that I took today. Remember, it depends on what time frame and what market you're looking at, but it's extremely simple to follow, especially if you have the add-on. It automatically will tell you when a signal is generated, and the PET D will automatically color the bars either red or green for you. So let's recap. We told you about the truth about formation patterns, okay, and candlestick patterns. They will work when they don't work. Why? Because they're too subjective, all right? They're just a little bit too difficult to figure out. They're not consistent, and they're not simple. We want things that are simple and that are consistent, and the best way to find that is through the number 1 chart pattern. That's a bar that closes in the top or bottom 25% of its range. Why is that so consistent and successful? Because it's not some trading guru, some guy on TV or some newsletter or some guy in a chat room or trading room telling you. It's the market telling you what it wants to do, that it's most likely going to continue in that direction. Remember, it doesn't matter if it's a 5-minute bar. It could be a weekly bar, okay? So that's the beauty of this chart pattern. And then lastly, we showed you how using this chart pattern coupled with the 50-period simple moving average and the PET D can really increase your odds for success, okay? So we showed you trades going back this past month, actual trades going back today that were traded by myself. So I just want to take the last couple of minutes of today's presentation to invite all of you to become members of strategy number 4 and the PET D tool. Okay, we're offering this 2-for-1 attendee special. This is instant course access. You can have these up and running within the next hour. Detailed instruction, entries, exits, stops, all the signal alerts, the automatic signal alerts, includes both add-ons for the PET D and the E-mini strategy 4, or the Forex, or the stock strategy 4. Weekly trading video lessons, archive lessons so that you can learn more things to hopefully elevate your trading, and access to my personal email. Okay. Now, one thing I want to share with you about the PET D, not only can it be used just with strategy number 4, there are a number of ways to use it. In fact, in the course itself, which comes involved with this 2-for-1 special, you actually get 4 different trading techniques that are totally different from what I just shared with you. So you're going to get a lot more information in the PET D course itself. In fact, let me share with you some of the early things that are also included with the PET D. You can also use this as a long-term tool. For example, here's a monthly chart of the S&P going all the way back to 1994, about 20 years, okay? Now, if you're an investor, if you have some type of portfolio or an IRA account, wouldn't you like to know if you should be staying in and when to get out when the market turned around and when to get back in again? Well, it was very easy. All you had to do was apply the PET D, and when the PET D is green, you're in the market. When the PET D turns red, you're out, okay? Now, every once in a while, you'll see one bar, such as we have here, the crash, I believe, of 2000, or a very strong sell-off. But please remember, you need about maybe 2 to 3 bars, a confluence, 2 to 3 bars to tell you. So you would have stayed in this entire time and got out of the market here, been out of the market or short, and then got in back here, and so on. So the PET-D can be used 1,000,001 ways. It's a great, great tool. I use it for my personal trading each and every day. So if we sold these separately, these two things separately on our course site, it would range anywhere upward of $3,000. We discounted it down to $19.95 to have both of these two working models together. But for all the attendees today, we've dropped the price even more down to $14.95, which we've never done before, only I believe once when we gave the same webinar about a month or two ago. That's the only other time we've discounted it that low. Now, I know that still may be a little bit too difficult for some people to make ends meet, so we have payment plans available. You can be paying on a monthly basis if you like. All of this can be put together so that we can hopefully get you on board to becoming a member of Specialist Trading, and you can take your trading to that next level. Remember, we are an educational website. I'm not just trying to generate signals for you to blindly take and just spit them out so you can take them. I want you to understand what the process is, and the only way you can do that is to become a member, and I can email you on a daily basis. I can keep in touch with you, and you can hopefully get your trading on that consistent level that you've been searching for. So for more information, you can go to our sister site, which is Pro Trader Strategies. That's the site that markets and promotes all of our individual trading techniques and strategies, such as we shared with you today. And you can email any one of the trading consultants at trading@protraderstrategies.com, or you can call us directly at area code 310-598-6677. I want to thank you all for waiting on asking any questions. I know a lot of you have questions, and let me just open up the question and answer box. I appreciate it. Let me see here. Wolford, hello, sounds great. Good, I'm glad I came through all right. Many times I'm worried that you can't hear me. Also want to say hello to Kumar. Kumar, welcome aboard. Kumar has been a student of ours, and he just purchased the strategy number 4 as well. So he's going to be also a student and learning from us this great technique that I use myself. Carlos asks, should I care about fundamental announcements, or should I ignore that and stick to the technical pattern? That's a great question, Carlos. We're not going to tell you that you should not listen to it. I personally never listen to fundamental news. All I can give you as my suggestion is that none of our information, anything we teach, any of our strategies rely on fundamental news. There is no room for them in any of our trading plan. Why? Because we're trading, for all intents and purposes, short term. And I don't mean 5 or 10 minutes. Even if you're holding a position for 1 or 2 weeks, that's basically short term. And most of our methods will get you in and out of the market within a week or 2 or possibly a month, but no more than that. Now, if you want to trade longer, sure, you can trade monthly charts, and that'll keep you in our positions much longer. But if you are an investor and you're looking for hold positions anywhere from 5 to 10 years, then definitely I would always say you need to know the fundamentals. But if you're holding things for 2 weeks, 3 weeks, there's really no need, in my experience, to look at fundamental news. I never look at fundamental news. I stopped looking at fundamental news about 25 years ago. I've been trading for 37 years, so trust me, there's no need to if you're trading this style. That's my opinion. Okay, next question here. What about when we get a controversial signal from PET-D to take the opposite trade? In other words, green arrow, red bar. Take the signal entry. Well, if you get, well, like we showed you, we had a green arrow, but there was a red bar, so that means you don't take the trade. We showed you a number of examples. The first one was SNDK, where it had the very first signal was a buy signal. The arrow was telling you to go long, but the bar was red. So that's the whole point of using the PET-D. You would take the confirmation from the PET-D, and it would have to be green. But in this case, if the PET-D was red, don't take the trade. Okay? If you're taking a long signal in strategy number 4, which generates a little up green arrow, the bar must also be colored green, and vice versa. Okay? It really increases your odds for success. All right? Answer your question, I hope. Let's see. James asks, does your system tell you when to exit? No, we don't, because remember, we teach strategies. It doesn't automatically tell you, but we teach you that in the course. In fact, we give you a number of ways to exit. So it's all up to you. We are not teaching systems. We teach strategies. Therefore, we give you a basic exit. We give you standard entries. We also give you advanced entries and advanced exits, so you can stay in the trade longer. we give you all this information, and then we leave it up for you to decide, because we don't want you ever copying the way someone else trades, because in my opinion, that's a recipe for disaster. Excuse me. That's why, as I said, I just don't blindly generate orders and tell you to take them and exit here. I give you lots of options to use your discretion because I want you to become a part of the process. My mentors taught me that the only way to get consistent is to become a part of the process. That means that you have to empower yourself and decide when you're getting out. Now, I teach you different spots of where to get out, but it's up to you to decide which one you want to take, okay? So we do give it for you, but I'm not going to tell you exactly where that is, because ultimately that will be your decision. Can you show a chart that signals when you get in and then get out? Well, just this last chart, this is a, not a live session. Those are actual static charts that I took from trades. But just, taking today's trades, each one of those trades I took basically about 2.5 points. I just decided that's one of our basic exits. I just took 2.5 points, or that comes out to roughly $125 per contract for each one of those trades today. Now, if you're just trading one contract, that was over $300 gain today. If you're trading 10, that was $3,000. That's about $3,200 today. So it's up to you. But once again, this is all in the course. Does it work with 1-minute charts? Yes, it does. I've traded it with 1-minute charts. But remember, it's up to you whether you want to be that intense, because you're going to get a lot of signals, as I showed you also with that 1,000 tick bar chart. You're going to get a lot of signals the smaller time frame you go to. If you take a small time frame, we even have some people trading this on a 250 tick chart. And I personally wouldn't suggest that, but some people like to trade. They like to get a lot of signals and get in and out very quickly. That's fine. But you're going to get a lot of signals, and so it's up to you if you want to trade that intensely. Okay? Let's see here. Can you get the PET D for MetaTrader? Yes, it works with MetaTrader. Oh, I see our VP of Operations already answered that for you. But just in case other people are asking, yes, it does work with MetaTrader. It works with NinjaTrader. It works with TradeStation. And it also works with Metastock. And if I forgot anything, Brett, you can answer that for me. Kumar is saying, sir, today I purchased only strategy number 4. The same rule, only use this strategy. Also, you showed us so many scripts with PET D. If we're using the PET D, we are not using 50-period moving average, because you never show the 50-period. No, we are using the 50-period. It just, I wanted to give you that was only for description sake, because I wanted to make more room on the chart. But we always do use, Kumar, we always use the 50-period simple moving average in everything we trade, okay? Now, please remember, the 50-period is your overall trend identifier. And I can give away this rule to you because I've spoken about it in other webinars. In any strategy you're trading, even if you decide not to become a member of Specialist Trading, you should always have a 50-period simple moving average plotted. If price is above, then that means the overall trend is up. If price is below, it means the overall trend is down. Whereas the PET D colors the bars for the short term. So a lot of people like to see what the overall trend is, and then once the short term gets in sync with that overall, then they jump in. This is why the PET D is a great, great confirmational tool. Okay. Christopher asks, any stop rules? Yes, we offer upwards of 4 separate and distinct stop rules in the course. But once again, that's up for you to decide. Why? Because some of the stops are very conservative, others are aggressive, others actually start even the trade without a stop, okay? That's for the very extremely aggressive trader, which we don't recommend for beginners. And we want you to decide, depending on your experience and also on how big of an account size you have, which one best suits your needs. Remember, it has to make you a part of the process. I don't want everyone to trade the same way, because it's a recipe for disaster. There's no way two people can trade the same way. I want you to mix and match all the things I've accumulated and share with you, so that you can fit this basic core of a consistent strategy to meet your needs. And this is all in the course. Okay? It's time for a few more here. Can you have a buy arrow green bar but below the 50? That's a good question, Morris. Yes, you can. In other words, you can have it below the 50, but the close must be above the 50. In other words, if the bar closes below the 50, there's no way it's going to be a valid green bar, a valid signal, green arrow. All the closes must be above the 50, okay? And vice versa if you're going short. Is the PET-D updated periodically? Also, can one change the settings of the PET-D? Hi, Mitchell. That's a good question. No, we don't mix and match, and we don't update it and say, so next year we have a different version of the PET-D. We actually supply you with 2 versions of the PET-D. I didn't go this in detail in the course because we didn't have enough time, but I give you a fast version of the PET-D and a slow version. And I really don't see, I've been using these for about 20 years. I have never tried to update them since. So I don't see any reason why we're going to update those or have to change. So don't worry. It's not as if you're going to be getting something that will be altered and we're going to ask you to pay more and upgrade. I haven't done an upgrade in that in 20 years. I don't see it coming. The PET-D standard one can be used for longer term. So if you're trying to stay in the trend much longer, the PET-D Fast is one for those of you traders who like to trade those 1-minute bars. Okay. Let me see here. Can you use this on any market or time frame? Yes, I showed you monthly charts and weekly charts on the Forex charts. I showed you daily bars on stocks. I showed you tick charts on the E-mini. So those are all valid examples, and they're real-world examples that our members took those signals. Okay, so it works in any market, any time frame. Witter asked, can you use the time frame, the 50 period, on any time frame or always on the daily? That's a great question. You can use it on any time frame. So I showed you those 10-minute charts of the E-mini S&P. That's taking the 50 period moving average into account. Okay, so I want you to plot it on any market in any time frame, always. It doesn't matter if it's a tick chart, it doesn't matter if it's a monthly chart. You should always have a 50 period plotted and then ask yourselves, where is price in relation to that? If price is above, that means the overall trend is up, and that means you should only be looking for long signals. If price is below, it means the overall trend is down, and you should only be looking for sell signals. It's that simple. You see how cut and dry that is? You don't have to sit there and go, boy, I really, I don't know whether I should be long or short here. Now, we tell you right off the bat, this is how simple it is to be in sync with the market, okay? Will the link to the presentation be available for me to watch again? Yes. Simply, you see the information there, I believe, in the chat box. Simply go there. There's the link. You can also contact us, as you see here, the email address as the phone number. You can contact us through that and request the link, okay? Leonard says he watched the presentation offer that was $49. How much is the PET-D by itself? Okay, the PET-D by itself is typically close to $1,600, as you see here. And the presentation we gave you for $49, that was just off of a webinar that, a seminar that I had given in Colorado. And you were given a free strategy as well as all the information I presented in that 3-hour learning session. That's totally separate from the PET-D. The PET-D was not even mentioned in that. The PET-D is too valuable, trust me, to be given away for $49, as you just saw today, okay? Just a couple more questions. R. Morris asked, do you only watch and act on one time frame at a time? Yes, Morris, I do. I know a lot of people like to look at the higher time frame, and that discerns what the lower time frame is. I don't trade that way. I know a lot of people swear by it. I only look at the chart I'm looking at. So today I was looking at a 10-minute E-mini chart, and that's all I looked at. I didn't care about what the daily bars were doing. I didn't care about what the hourly bars were. If I got a signal on the 10-minute, that's all I'm concerned with, and I apply the proper rules. So that's the way I trade. You can use a higher time frame. I'm not saying it's wrong, just as I told that other question, or answered the other question about fundamental news. It's just that there's no room for it in our strategies. I've never really seen any consistency. So why complicate our trading by having to focus on another time frame? Let's keep it simple. Let's just look at the time frame we're trading. Okay? A lot easier, a lot simpler. Okay? Rick asked, does this technique work equally well on stocks as it does on the E-mini? Sure. We have people that swear by it in each of the different courses. We have Forex members that love it. We have, in fact, for this year in the Forex markets, because we just figured out the numbers for daily signals only. If you're just taking strategy number 4 signals in the Forex markets, it's up over 30%. Your account will be up over 30%. Okay. Now, those are just signals on daily bars. You can trade this on 10-minute charts. You can trade this on weekly bar charts. We don't have numbers for stocks or the E-mini because there's just too many time frames. And plus, on the E-mini, or I should say on stocks, there are just hundreds of signals generated a night. So you can scan these and look for the best ones and decide which ones you want to take according to your price level and how much money you have in your account. So It's a great way to trade, very simple, and I'm really, from taking from someone who trades it today, as you just saw, it's something I really feel can get you on the road to being consistent. Last question here. Brian asks, how do you use the add-ons on TradeStation? Well, you simply just upload them, and you automatically turn them on if you want to use them, and you will generate different signals telling you when strategy 4 is giving you a buy signal or a sell signal. It will automatically tell you that in real time. And if you upload and click on the PET D, it will automatically color the bars either red or green. It's that simple, okay? Lastly, Leonard asks, what is the monthly payment for the combo? Do I need to know about this instead? Well, that's something you work out with us. As you see here, Brett just answered the special PET D strategy number 4 course combo offer. You can go to that link and click it on, and our members will work together with you depending on what meets your needs so that you can put something together to work for you. Okay? Someone may be able to only pay $100 a month, where someone may be able to pay it off in 2 months. It's up to you, but we really want you to come on board. We're trying to work with you so that you can have this up and running. And even if you decide to go on the monthly payment, you'll be getting all the information as soon as possible. So once again, this is a great technique. We have to close here because we're just about out of time. If you want more information, kindly email any of our trading consultants, as you see there, at the email provided, and they'll give you all the information, or you can call us directly at 310-598-6677. And we'll send you the link also to the presentation. I use this each and every day, and I'm telling you from the bottom of my heart, I've been using this for years actually, but with the advent of programmers and high-speed computers, we've been able to actually put this together in programs so that you can automatically see the arrows telling you when to buy, and you can automatically see the colors turning red or green. So we couldn't make it any simpler than that. But on top of that, remember, once again, we just don't want you to blindly take signals. We want you to understand the process. That's where the teaching and the mentoring comes in. So that's why you have personal access to my email, and that's where you can contact me each and every day. Okay? So I want to thank you so much for attending today's presentation. I really hope that you take advantage of this deep discounted offer we have. If we sold these separately and you purchased them without any deal, it would roughly costly over $3,000. We had a special discount down to roughly $2,000, but we've discounted even more just for the next couple of days for the attendees of today's presentation, down to $1,495. Remember, we'll work with you any way we can to hopefully get you on board with a payment plan. So just contact us at trading@protraderstrategies.com or call us at 310-598-6677. Thank you so much for attending today, and I really look forward to all of you becoming members of Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.